All right, so today we're going to focus on the concepts of property, plant, and equipment. Now, the concept of property, plant, and equipment is very important for any organization, especially trading organizations, because they rely on their property, plant, and equipment to generate income, all right, to generate revenue. So what we're going to do is to start with a definition of property, plant, and equipment. But before that, let me just introduce myself. My name is Thomas, and I'm a tutor with Topcrest Online. All right. So what we do is that we provide tutorials to students. Most students do know us. So if you want to inquire what we can advise you to do, this is the WhatsApp number for Topcrest Online. So if you want to join any module, whether it's FAC, MAC, or any module you want, what you can do is to go onto this WhatsApp number and ask to join a free Telegram group. All right. So you have to mention the specific module you need and that you want to join a free Telegram group. All right. And when you join the Telegram group, you can inquire about tutorials. You do not inquire about tutorials on WhatsApp. All right. You inquire when you get to Telegram. There are Topcrest Online consultants that can speak with you. All right. So you just have to inquire in Telegram about the tutorials that we offer. Joining our Telegram groups also helps you because some of the times we just post material or discussion concepts on Telegram group. The Telegram group is not our tutorial class. We just help here and there. All right, so let's go to the business of the day. So when we define, when we look at property, plant, and equipment, we need to define what that property, plant, and equipment is. So if I'm going to define that for you, I'm going to think in terms of the things that will be classified as a property, plant, and equipment is going to include your land, right? It's going to include your buildings. All right, so let's say here it's going to include your land, your buildings. All right, so all those are going to be added up together to get our property, plant, and equipment. So we're going to say computer equipment, all right, furniture, office equipment, motor vehicles, all right, and we can talk of machinery. We also can talk of a plant where we do our manufacturing processes, all right, that can be classified as plant. All right, so basically these are the items that form the property, plant, and equipment. And as you know, your property, plant, and equipment is going to be carried at carrying amount in the statement of financial position. So when we record the property, plant, and equipment figure in the statement of financial position, we're going to get an accumulated amount at carrying amount. So we need the carrying amount for land, the carrying amount for buildings, the carrying amount for computer equipment, and so forth. And as you know, our carrying amount at our level, at a beginner's level, the carrying amount is equal to the cost minus the accumulated depreciation. And so for you to be able to determine the carrying amount at a beginner's level, you need to be able to determine the cost of PPE item. All right. So if you go to your study guide or any learning material you use, or even on the internet, they will guide you as to what is included in determining the cost. All right. And also calculating accumulated depreciation. All right. We have recordings that did explain the various methods of calculating depreciation. So you need to know how to calculate depreciation using straight line method, using diminishing balance or reducing balance. Diminishing balance and reducing balance are the same thing. You also need to know how to calculate using the production units methods. the production units method. All right, so you also need to know how to calculate accumulated depreciation. That is the depreciation that has been accumulated from the beginning of use of the asset to the time period we are at on that particular point in time. All right. So the accumulated depreciation is from the time we started using the asset to this particular point in time. And that accumulated depreciation can be calculated using any of these methods. So the important point here was that your carrying amount of PPE, right, if you disclose it in the statement of financial position, it's going to be a carrying amount. So here's an example that is going to guide us into working with our property, plant, and equipment note. And take note that for most questions, this is going to be a very important topic. So here's an example. And as we always demonstrate to you, as we've always explained to you, the first thing that you need when tackling a question is to determine the financial year, because the financial year is a cycle of 12 months. So if you're supposed to prepare the PPE note as at 31 October 2010, this for us is the end of the financial year. So the first step is to determine the beginning of the financial year. And the beginning of the financial year, like we always explain, the financial year begins tomorrow last year. So tomorrow is 1 November, right? The following day last year, all right. So the following day after 31 October is 1 November. Then last year, that's 2009. All right. Unless if our financial year starts on the 1st of January, then obviously it ends on the same year as well. That's the only unique case. Right, so our year started from 1 November. So what we're going to do is that we're going to have 1 November 2009 to 31 October 2010. All right, so what we're going to be looking at in this particular case is that all those transactions that affect property, plant, and equipment. In this particular example, we're going to focus on equipment only. All right. And the way we treat this particular item of property, plant, and equipment applies to all other items. So it could have been delivery vehicles instead of equipment. It could have been machinery. It could have been computer equipment. All right. So we will demonstrate to you how the calculation is done. Now, this is what you need to pay attention to when you are dealing with property, plant, and equipment. I want you to know that the property, plant, and equipment note has 3 sections. All right. So I have an example here. Those 3 sections. The first section has to do with the balances at the beginning of the year. All right. So this is the first section. All right. At the beginning of the year. Then we have the second section, which tells us of the changes that occurred during the year. Right. So all these are the changes that have occurred during the year. Then the third and final section is the one that deals with balances at the end of the year. All right. And this is now we're reporting at the end of the year, what are our balances? So basically it's a reconciliation of property, plant, and equipment, where we say we started with so much as a balance, then there were transactions that affected the PPE this way and that way, and at the end of the year, this is the balance that we have. So that's the 3 sections we have. So what I'm going to do here is to start with the section at the beginning of the year, the first section, which we have identified as the first section. Right. So let us go through this question together to identify the information that we need to construct the property, plant, and equipment note. Right. So when we are given figures like this, all right, we have to be very careful as to the balances. So we say to ourselves, what dates are given to us. All right. So we need to know the dates that are provided to us. So in this particular case, we are specifically told that these are balances at 1 November 2009. And as you remember, our 1 November 2009 is the beginning of the year. So for the section that we want for the beginning of the year, we already have the amounts that we need, all right, because we need the cost at the beginning of the year, we need the accumulated depreciation at the beginning of the year, so that we can get the carrying amount at the beginning of the year. So for us to get the carrying amount at the beginning of the year, we're going to say the cost at the beginning of the year less the accumulated depreciation at the beginning of the year as well. Okay, so that's going to be very easy. Why? Because the information we need is provided. So we go to the first section, right? There on our first section, we have the cost that is given to us, which is 280,000. And this, if you are using your general ledger accounts, this will be the balance brought down in the machinery account or equipment account. All right. So it's machinery or equipment, whatever it is. So this is going to be the balance brought down, right? From last year, the cost. So here's something that I want to emphasize, but let me emphasize that after explaining this simple beginning section. So the cost is given 280,000. Accumulated depreciation is also given. And then the difference between those two, your cost minus accumulated depreciation at the beginning gives you the carrying amount, which is 280 minus that amount gives us the carrying amount. So that is how you display your PPE note, the first section. So as you can see, this is very easy. You can collect a lot of marks. So in this third column, or is it the fourth column, I've given you the tutorial pointers. So for cost, I said it's balance brought down. For accumulated depreciation, I said the amount should be in brackets. This amount here should be in brackets because we're subtracting. All right. So when you go into your assessments, say you're doing a drag and drop, if you're not going, or even if you're writing, then it makes sense if you writing and you put in brackets. If you're dragging and drop, you drag and drop the amount with the bracket as the accumulated depreciation. Now I said to you, I wanted to talk about something that is very important. I'm going to talk about it now. So when you deal with the property, plant, and equipment at the beginning of the year, look here, we don't just take these figures because they are given first like this. We are specifically told that there are balances at the beginning of the year. Sometimes what happens is this cost may not be the cost at the beginning of the year, but maybe the cost at the end of the year. So you have to check your information carefully. All right. In this case, we are specifically told it's a balance at the beginning, but sometimes you are told this is the balance at the end. So how do you now determine the balance at the beginning? All right. So you have to use your reasoning to say, let's say we have 280,000 as the balance at the end of the year. Okay. And you are told that during the year we sold equipment which had a cost of 100,000, and we bought new equipment with a cost of let's say with a cost of 80,000. So we are being told we removed cost equipment with a cost of 100, and we added equipment with a cost of 80,000. And after all that, we are left with 280,000 at the end of the year, the cost of equipment in our accounting records at the end of the year, after accounting for all those transactions, the balance is 280. So basically, you can try to put that in form of an equation to say, let's say the cost at the beginning of the year is A, right? And then we subtracted 100,000 from A, right? Then we added an 80,000 extra, which we acquired during this current year. So our balance is now equal to 280,000. So what was the original cost? So that that original cost, if we subtract 100,000, because we sold equipment at cost, which at a cost of 100,000, not that we sold it for 100,000, but the equipment that we sold, we originally bought it for 100,000, and then we bought in new equipment for 80,000. So eventually we end up with 280,000. So you can solve this equation, all right, and you get the cost at the beginning, and that cost at the beginning is the amount you're going to put on here, right? And the cost at the end is the amount you put on here. All right, so you need to pay attention as to the dating that is used, the date system. Is it the amounts, are the amounts for the end of the year, or are they for the beginning of the year? All right, so that's the first. All right, so that will be in some form of box like that. Then you get 115, 200. Now, what we need to do, we need to go into the section that talks of transactions that happened during the year. All right. So for the transactions that happened during the year, at our level, at the beginner's level, we are interested in calculating depreciation for the year. We are interested in calculating additions during the year. We are interested in determining the disposals, or the ones that we sold away, all right, the ones that we removed. All right. So depreciation for the year, acquisitions during the year, and de-recognitions during the year. All right. So we're going to listen to the story so that we can determine each and every. So let's first of all start with depreciation for the year, right? So let's start with depreciation for the year and look at how we're going to calculate that. So we are told that at the beginning here, this entity sold old printing equipment for 31,000. The machine was bought on 31 October 2004 for 180. Depreciation was provided for at 15% per annum on the straight line. So what this is going to do is that it's going to affect our disposals, all right? Because we disposed of this equipment, okay? But we cannot calculate depreciation on this disposed equipment. And what is the reason for that? Because we disposed it right on the first day of the year. So in other words, we never used that machinery, that printing equipment. We never used it. If we had used it a little bit, like for a month, we would have calculated that month's depreciation and included it in the current depreciation. Brilliant. So for this particular item, depreciation was provided for at 15% per annum. So what we're going to do is that we're going to show you how to calculate the accumulated depreciation, right? When we deal with the disposal. So let's just deal with the disposals now. So the disposals section, if you look at the disposal section, it has the cost of what was disposed of, then the accumulated depreciation of what was disposed of, then the difference between the cost and the accumulated depreciation is going to be your disposal at carrying amount. It's going to be your disposal at carrying amount. So let's listen to the story. We are told that the cost. So I want you to distinguish between the selling price of something that we dispose, because we dispose of something, we could possibly sell it. But in your PPE, you do not record the selling price when we dispose it. You record the original cost to us when we bought it. So we don't record the 31,000 in the PPE note, all right? We only record the original cost. So this was bought on 31 October 2004 for 180,000. So we already have identified the cost of what was disposed. It's 180,000. And it's in brackets because we are removing it. Then the next thing is for us to calculate accumulated depreciation. All right. So how do we calculate the accumulated depreciation here? So to calculate the accumulated depreciation, we need three things. We need the percentage. So the percentage here is 15%. Then we need the method. So the method is straight line. Straight line means we calculate on the original cost. So it's 180,000. Then we need the time. So for how long did we use this? So this method only works if you are using straight line. Because if you're using straight line, you can multiply by the number of years. But if you're using reducing balance, you have to calculate for each year. For each year, it's going to be a different answer for each year, for each year, for each year. All right. But for straight line, it's going to be the same percentage, the same cost every year. So for this was bought in 2004, right? 31 October. So we first used it in 1 November 2004. That's the first that's the first day. And the first year was 1 November 2005, if you believe, all right, or 31 October 2005. Then 2006, second year, 2007, 8th year, 2009, 9th year, all right. Then so we actually, I think here I see 4 years. Is it 5? Let me just count again. So if 2005, 6, 7, 8, 9. So basically it's 5 years. I'm going to multiply that by 5. So the accumulated depreciation by the time we disposed was 15%, 15% multiplied by 180,123, right? Multiplied by 5. So the accumulated depreciation was 135,000, right? So you can confirm that. So this is the total accumulated depreciation of the disposed machinery on the date of disposal, which is on the 1st of November 2009. So now the carrying amount is going to be equal to the cost minus the accumulated depreciation, right? And the cost here, then the carrying amount is going to be 45,000, but it's in brackets because we're removing it. All right. So remember, this accumulated depreciation for disposals is not in brackets, but the cost is in brackets. That's very importantly two things that your lecturers expect you to understand. So this section is done. That's how we basically deal with the depreciation. Then let's look at additions during the year. So let us look at additions during the year. Right, so how much did we add during the year? So we are told that we added equipment worth 145,600. So it's 145,600, which was added during the year. So for my additions during the year, I'm going to say 145,600. So this is for machinery that was bought during the year. So I'm getting my marks for putting in the things that are simple and straightforward. Now, most of the work when you prepare a PPE note goes into this depreciation for the year as well as the accumulated depreciation of the disposed. Okay, so we are done with this. Let's go for the depreciation for the year. So when we calculate depreciation for the year, we pay attention to 3 categories. First, we had old equipment that we had from last year, which we used this year, right, up to year end, which we used the whole of this year. This is the first category. The second category is the ones that we had from last year, but we sold them sometime during this year. we need to calculate the depreciation separately. Then the third category of depreciation is the ones which we didn't have last year, but they are the new ones which we bought during the year. Okay, so for us to calculate, we have to identify these three categories. So we need the old, which we used last year, and we continued using it the whole of this year. We know that this is not going to change. It's 15% multiplied by, because this is given here. However, we know that at the beginning we had 280, all right, and then immediately we sold 180. All right. So the cost was 280, all right, from last year. But when we started this year, we sold equipment worth 180,000. So what that means is, I'm going to say 280 minus 180. So the remaining is going to be 100,000. So this 100,000, remember, I used it for the whole of this year. So the cost is, the depreciation for this year is going to be 15,000. Then the one that I had for last year, which I sold this current year, so that one was sold right at the beginning of the financial year, so it was never used, so that is going to be 0. Then the one that was bought this year, it's calculated based on the diminishing balance method. So the diminishing balance says your cost minus your accumulated depreciation. All right, so our cost is 145,600, and when we started using it this year, the accumulated depreciation was 0 because we just bought it. It's new, we haven't used it. And then the rate of all right, it's 25%. That's the percentage depreciation is 25%. Right, then we multiply that by the number of months we used it during the current year. So we bought it on the 1st of December. So we need to know when was it available for use. All right. So if we are not given a separate date, then the date we bought it is also the date it was available for use. Because we start calculating depreciation on the date an asset is available, not necessarily when we acquire the asset, not necessarily when we start using the asset, but on the date the asset is ready for use, then we start calculating depreciation from that date forward. So it was available on the 1st of December. So we have the month of December up to October, that one October. So how many months is that? So I think that's 11 months for me. All right. Don't worry if I do make a mistake, that's not important. You just need to calculate properly because the principle is more important than the answer. All right. So we have 145,600. 145,600. We multiply that by 25%. Then we multiply that by 11 divided by 12. So I get something like 33,367. So let me just check if I picked the amounts correctly here. So it's 145,600 times 25% times 11 over 12. So this is what I get. So 367. So this is the depreciation for the new one. So the depreciation for the year for equipment is going to be depreciation for the old, for this category, plus for the category, plus for the last category. All right. So we're going to have 15,000, right, plus 0 plus this amount here. Okay, so that's going to be our depreciation. And all right, so if perhaps I did make a mistake with my calculator there because I see I have a different amount. So let me just recalculate that. Yeah, so actually have 48367. That's the correct depreciation for the year. So that depreciation for the year, you're gonna put it in brackets like that because you're deducting it. Okay. So the amount should be in brackets. So it's made up of the depreciation that we incurred when we're using the equipment during the current year. So we are done with the portion that deals with changes that happened during the year. Now we left with the balances at the end of the year. So we start with our the section for end of the year is the same, is similar to the one for the beginning because it's a carrying amount, but now it's at the end, cost at the end, accumulated depreciation at the end. So how do we determine these amounts at the end? So that's a very, very, very simple exercise, right? That's a very simple exercise because we're going to say the cost that we had at the beginning, right, plus the cost that we added during the year, right, deduct the cost that we removed during the year, right, is what is the cost remaining at the end of the year. So this is going to be the balance. Okay. So it makes logical sense because when we started the year, we had 280,000. Then we added an extra 145,600. Then we removed equipment with a cost of 180. So what should be our balance be? So obviously 280 plus 145 less 180. This is the cost at the end. The same applies to our accumulated depreciation. We're going to use the same principle to say we started the year with 164,800. Then during the year, we added some more depreciation to the amount of 48367. But during the same year again, we removed a depreciation of 135,000. So what's the accumulated depreciation remaining? What we had at the beginning plus the extra we added during the year, less that which we removed, is the balance we should be having at the end. Okay. And that's in brackets. So the carrying amount at the end of the year is the difference between the cost and the accumulated depreciation. All right. So this PPE, you need to practice it a lot over and over, and you will be successful. So what you can do is that when you have played this recording, you can go back right to the question, and set the question for yourself. Then try to prepare the PPE note and compare it again with the recording to see if you're going to make any mistakes. Then you're going to learn from those mistakes. You're going to rectify those areas and then you come out right. So thank you very much. If you'd like to subscribe, please do subscribe to our videos on YouTube. And if you would like to join our classes, remember, just mention the module then on this WhatsApp number. Then they will direct you to the Telegram group where you can interact with other students. There are tutors there. If you would like to join private tutorials, then once you join the Telegram group, you can once you join the Telegram group, then you can inquire from the top crest online consultants to say, can I get a tutor for this? And they will explain to you the process. Remember, it's not every Telegram group that you are in that we post this material. We post on top crest online Telegram groups, not just any other Telegram groups. So we wish you the best as you prepare for your upcoming assessments or whatever assessments you're going through. We wish you the very best.